Well, good evening to everyone. It is a pleasure to welcome you this evening to Operation Financial Freedom. I'm excited to welcome you, those of you who are joining us on YouTube. We have an excellent panel to share with you some truths about finance, to empower you and to help to give you the freedom that we are proposing this evening. We have a wonderful moderator who will keep things going this evening. And I want to thank all of you who have been with us for this journey on our Family Life Enrichment series. This is our penultimate session. So we're ending with our next session next week, a growth mindset. But we are delighted to welcome you this evening. I believe that this session is going to be such an empowering session. And so if you have a friend that may not be in as yet, please send them a message, send them the link, and tell them, come, they need to be here to hear what is going on so that they can be free themselves. All right. We're talking about money this evening. And when we think about money, it may surprise some persons that the Bible has over 2,300 verses that talk about money or wealth or possessions. In fact, about 15% of the teaching of Jesus is about money. Jesus taught more about money than any other topic. And I think that if money is so important to God, then money should be important to God's people. And so we should have some good perspectives about money. And I believe that being part of this session this evening will give you some excellent perspectives about money. Now, Marcia Hurley Gibson is going to be our moderator this evening. Marcia has worked in accounting for over 30 years, primarily in the offshore sector. Her love for numbers has led her to serve in other financial capacities. She currently sits on the National Finance Committee of the Church of God, and she is the treasurer at her local church, the Garden Community Church of God. And she's also a board member of the One Heritage Cooperative Credit Union Limited. Marcia loves her family, and she has the joy of mothering 4 beautiful children. She's also a new Sunday school teacher. And one of her goals for the near future is to launch a homework help program in the community. Marcia loves the Lord and believes that he who has begun a good work in her will carry it to completion. We are excited, Marcia, to have you as our moderator this evening. So good evening and welcome. And the show is yours. So you're going to take this evening, and I'm leaving it in your capable hands.
Thank you, Reverend Lennox. We have an esteemed panel here tonight, and I'm going to start by introducing you to Sherry Ann King. Sherry Ann graduated from the University of the West Indies Cave Hill campus in 2014 with a Bachelor of Science degree in accounting and finance with honors. She went on to pursue her professional designation and became a member of the Association of Chartered Certified Accountants, commonly referred as the ACCA, as well as the local accounting body, ICAB, the Institute of Chartered Accountants of Barbados, in 2018. Sherry Ann has been employed in the public accounting field for just over 6 years, and she believes that it's important to give back to the community by adding value to the development of the youth. She participates in community activities with her business organization and is an active member of her church, involved in teaching Sunday school, and is a leader within the youth ministry. In her spare time, she enjoys creating memories with her family and friends, and as she learns new life skills. Sherry Ann particularly enjoys cooking and swimming. C.S. Lewis said, "Integrity is doing the right thing, even when no one is watching." Sherry Ann believes that integrity is one of the fundamental values which one should commit to making a habit. I like that. Well, let's welcome Sherry Ann King to the panel tonight.
Thank you, Marcia.
Thank you.
Be here.
Next we have, if I can find, or let's move to Jeff. The gentleman in the crowd tonight is Brother Jefferson Allen. He has worked in accounting and auditing for over 30 years. He has worked with KPMG and Deloitte and Touche in the past and now works as a consultant with a small auditing firm, Skeet Best and Company. He also performs accounting services for a few small businesses. Mr. Aling has performed auditing services for government offices within the public sector and in the hotel sector as well. His experience also spans the retail and offshore sectors. He comes with a wealth of knowledge and has willingly consented to share some of this knowledge with the Unit 2 Cape Entrepreneurship students of the Ellerslie School. Let us welcome Mr. Jefferson Aling. Last but by no means least is Melinda Peters. I'm having a little difficulty getting Melinda's bio. Just give me a minute. Melinda, I know Melinda from Instagram as Money Matters with Melinda. I don't know if anyone else sees her online. Brother Lennox, do you have Melinda's
Do you want me to help you, Marcia?
Yes, please, because
it's
not coming up. It's not coming
I
up.
have all the details.
I know Melinda well, but I don't know her enough to introduce her officially without her bio coming up on my phone. So I'm going to ask you to do that introduction for me.
So Melinda Peters, author, teacher, and financial consultant, from an early age had a particular interest in money. Businesses are often birthed out of the business owner's personal experience, and it is with her mistakes, knowledge, and experience she desires to see others make sound decisions with their money. Melinda sees her role as that of an architect and is committed to the shaping of financial landscapes of men, women, boys, girls, businesses, and nations, teaching families and individuals to manage their money and to increase wealth. Melinda is the founder and managing director of Finance Inc. Okay, in Barbados, with a mission of being the leading financial education company, providing resources on personal and business financial management in the Caribbean. Melinda Peters.
Hi, good night. Good night. Thanks, Reverend Leonard. So we're going to go straight into our discussions about money. We're going to the planning of our finances, budgets, and record keeping. Into this, we're talking about of income. How do we keep this money in our hands? You know, some people know, and then you don't have it. How do we keep money in our hands? And what things should we consider when we are planning our finances? Brother Jeff, over to you.
Oh, sometimes you were going in and out. I wasn't hearing everything. Sorry about that. So budgeting has to do with setting financial goals. So you said, if you're going to achieve anything and know that you've achieved it, then you must make a plan as to where you're going so that when you get there, you would know that you're already there. You get there. So the same with your finances. Lots of people think that only people who have money should budget and make goals or set goals for their money. But I think that people who have less should budget even more so than the people who have. Because if you have $1 billion, you know, it probably doesn't matter what you do today and tomorrow. But if you have $10,000, you want to be able to control that. If you have $1,000, you want to be able to spend that in the best possible way. So when we think of setting goals, we think of setting short-term goals and we think of setting long-term goals. Where do you want to be with your finances, let's say at the end of this year? And you try and set realistic goals. Otherwise, you get despondent, you get bored, you get tired, and you get turned off. So you want to set goals. If for you, saving $10 a week or $20 a week is good, then that's what you do, because you can look back and see in 52 weeks time, you would have saved $520 or whatever the case is. And you can build on that year after year. As you earn more, you can save more. Not only that, you set yourself a goal of getting out of debt or some such thing. If you're trying to get out of debt, then you know you might be paying more of your money presently towards getting out of debt. Whereas the pleasures of life, you would think, I can afford to sacrifice some of those things. I don't have to go to every fete that there is and things like that. So you would want to set the goals that you want, knowing that what is going to be important to you is what will help you in achieving your goals. A part of the process, you make a budget. No, it is important to write down everything. You write down your regular expenses and your irregular expenses. Your regular expenses, light, telephone, water, rent, those are monthly things that come up. But a lot of times what throws you off would be the amount, the insurance, the car insurance that comes up once a year, or that you can probably pay for over 3 months. But the fact is that when it first comes, you didn't plan for it. So you didn't set aside in April when you had money, you probably used it, forgetting that in November, things are a bit tighter in November. I don't do as much business or whatever. Or then the insurance comes up due in November and you don't have the money readily to pay what should be paid. You have children to go back to school in September. How many uniforms do you have to buy? Do you have to buy books? You have to buy backpack. What those sorts of things come up, and you need to know that they're coming up. So you need to write down everything that has to be spent, the regular and the irregular. You're required also to build a little emergency fund. However much you can, you put aside something on a regular basis for any eventuality that comes up. You don't want for sickness to come up. Let's say you get sick. You won't be able to go to the doctor and pay the fee. Or there might be some other thing that comes that happens in your life that you know you cannot plan for those eventualities like that. You don't know if it's going to happen or not, but you want to be able to have some sort of money there, at least to help start the process. So you need to start building an emergency fund. I like to think that one of the ways helping you, once you have things documented, you know when your bills are coming due. You pay your bills on time. A classic is our light bill. If you pay your light bill on time, you're going to get a little discount of $2 or whatever the discount is. If you don't pay on time, you are going to be paying the light and power company the extra $2. No, 12 by 2 would be $24 that you could find to do something else with. But it is yours if you have it. So when bills like those become due, you pay them on time. There are also lots of people who will charge you extra if you don't pay on time. So you don't want your mortgage to be late. You don't want your light and power to be late. You don't want your cell phone bill to be late, depending on whatever happens. Also, a simple telephone bill, they disconnect you. If they disconnect you, you have to pay a reconnection fee. All that is money that you do not have, and you're basically wasting it. You also have to plan for your retirement. So all of this goes into it. Make sure that there's something you put aside for when you get older. Lots of times, if you live in Barbados, you understand that the NIS will not help you maintain the standard of living to which you're accustomed. So any extra that you can put aside for yourself in some special savings, then that would also help you. Sometimes you get money, like a windfall. That is a good piece of money that you can invest if you have the facilities in Barbados to invest in. Then you can invest that money. You might be able to pay off debt with it. But again, if you have everything documented, you know where that money should go. If you have it well documented, you know, okay, I have X amount more time to pay off some bill. But if that bill is at a really high interest rate and you get extra money, you can go and pay off that debt so that the interest you will be able to save now from paying in the months to come, as it were. I'll stop there. Hello.
We were missing your voice, Marcia.
Oh,
I miss you,
anyone
Marsha.
else? My audio seems to be dropping out, but I was asking if any of the other panelists wanted to add to Jeff's contribution.
Sure. I always tell people that budgeting is a lifetime practice. It's something that you're going to be practicing for the rest of your life. Juggling, preparing for surprises, preparing for what it is that you like to do in the future. There's the financial plan, and it consists of most of what Mr. Ali would have said earlier. There are different aspects to consider. Yes, it does start with your goals, but then there are different things you might want to acquire. You might want to acquire assets in the future. You want to acquire a house. You want to acquire a vehicle. And then there's a debt management plan. You want to figure out, how you are going to get out of debt. How are you going to ensure what it is that you have? Retirement planning, estate planning, which is really crucial and important, because the thing is that when you actually leave this earth, you can't take what it is that you would have accumulated over the years. So you need to figure out, who you're going to leave whatever possessions to whoever else. Okay, so that's a key component as well. But when I tell my clients, when I meet with them, or I tell people, if it is that you're not so really au fait with budgeting, what you should do, or what I would advise you to do, is just to track your expenses for 1 month, so that you can see where the money is going. Not that you're trying to budget in this instance, because sometimes people don't have an idea of how much money that they're going to allocate for particular expenses. So in a particular month, you would see, okay, this is how much money I spend in gas, this is how much money I spend in food, this is how much money is going towards coffee that I didn't know about, this is how much money that's going towards subscriptions that I apparently have too much of, all those different things. Because what this does is that it helps you to audit your spending. So when you take a look at your numbers, then you'll be able to make the adjustments necessary. You say, hey, you know what? I could buy food to bring lunch. If I could use myself as a personal example, I was making all sorts of excuses because I'm an entrepreneur. I'm busy. The quickest meal that I could get is Chefette or KFC because, it's really important. But I recently started a meal plan, and it's been very, very beneficial, to the point that I've lost 8 pounds so far, which I'm really stoked about. But the point is that once I have that plan in place, I'm less likely to go outside of my budget and less likely to go and spend money otherwise. But if it is that you want to get a handle on your spending, just get to know your numbers, get to know where the money is going. And once you have an idea of the amount of money that you spend and where that particular spend is going, then you could create a budget based on the actual information. So that would be my bit.
I'll just add, yes, I concur with everything that my fellow panelists have said. But as it relates to budgeting and, tracking finances, yes, a very key part is being sure that you have those records, that you're keeping track of. And that could be as simple as, you have a little, the little calendar books, which have the dates. You might just want to jot down, okay, I've spent X cash for the day. Things like that. Simple things like that in everyday life you can do if you don't necessarily have, fancy tools which help you to budget. And everybody might not be able to, figure out how to, do budgets. They may think it's a little complex, but it doesn't have to be complicated, as Melinda said. Just simple things like keeping track of your expenses. Many times you get your grocery bills and you just take them and you smash them up, throw them in the garbage, or you go and you withdraw from the ATM and you get the receipt, you just throw that away. Online banking helps us with that now. We're able to track that, more easily with online banking. But simple things like that, keeping your records, keeping your bills until you have tracked that information helps to understand where your money is going on a monthly basis. And by having budgets and by keeping those track records, then if you do need to go for debt, you do need to approach a financial institution, you have the information there that they're going to require, because they're going to want to know how much income are you making, what are your expenses like. So budgeting and record keeping really is an important part of financial management.
Hi, Marsha. We're missing your voice.
Seem to be having a challenge with my mic.
Right. It may be the microphone. It might be shifting.
Is it there now? Are you hearing me?
We can hear you now. Yes.
Platform that they can post their questions.
We're missing your voice again, Marsha. Okay, so yeah, we're missing Marsha's voice. So Marsha's getting started. So can we just maybe move on from there a bit, and let's talk a bit about debt, because I know that's one of the things that scares a lot of people, but somehow all of us seem to at some level find ourselves there. So can we talk a little bit about, is all debt bad debt? Things like, is it always necessary or better to use cash? Let's talk about debt a bit. And I think Melinda looks as though she wants to jump right in there and chat with us a bit about debt.
Sure, why not? So there are two measurements that I work with. There's the debt safety ratio, which is the percentage of your income that's tied up in consumer loans. So consumer loans tend to be your hire purchase, your credit card, the Massey cards, and all those different things, the lines of credit. Those would be considered consumer loans. Now, the measurement or the level at which people should be in, it should be 20% or less of your income. And the reason why they talk about these percentages is so that you'll be able to have more money to accomplish more financial goals. Now, the measurement that lending institutions are really interested in is the debt service ratio, which is what they review. So that would be the percentage of your income that's up in debt, inclusive of consumer loans. So along with the consumer loans, which I talked about earlier, the credit card, hire purchase, and all those things, that would include your vehicle, that would include your mortgage, that would include student loan debt and those things. So no more than 35% of your income should be tied up in debt. There's some lending institutions which allow 40% and under, but it depends on your spend and it depends on where you're at. Now, the way in which debt becomes a problem, that's if you have more than 35% of your income. And I do believe that most of the challenge and the issue comes with consumer loans. Those little things that we do get, let's say, for example, we get a loan to go and travel, or we go and get a loan to, I don't know, do those different things. Now, there are certain things you can pay cash or put down money towards. Yes, traveling. Maybe we may be able to start traveling soon, but in the meantime, we're mostly grounded, okay? But then little purchases like laptops, for example, I think this is still instituted that if it is that you go for hire purchase, you could pay off the cash value within 3 months. I think they do allow that. But the thing is that you have to be very careful in terms of taking on some of these things. Yes, getting a home is super important. Unless you're born with a golden spoon in your mouth and you have cash left over, well, then you could actually consider getting a mortgage. But there are some people with money who actually do take a large deposit and borrow on top of it, and it does earn them interest over a period of time. But if it is that you're looking to get debt for certain purchases, a car, a house, it would be good to have a deposit. So let's say, for example, you are looking to get a mortgage for $200,000, okay? You could decide to go in with a deposit of $10,000, but that means that you would only get a mortgage on $190,000. So that just lessens the amount of money, in a sense, that you pay towards those things. So the same thing for your vehicle and the same thing for those things. Now, if it is that your income is more than, your debt service ratio is more than 35%, well, then it may mean looking into these solutions. Number one, the debt snowball. I don't know if any of y'all would have grown up watching Bugs Bunny. In fact, all of us did, of course, Daffy Duck and those cartoons and so on. So they're on top of a mountain and they start rolling down, and it's really small at the top. And then as they roll down the hill, the snowball keeps getting bigger and bigger and bigger, right? To the point, yeah, everybody is, So the thing is this is how it works. So debt number one, you're servicing and paying $100. Debt number two, you're paying $200. So you could decide to pay off the debt with the highest interest rate, or what I more recommend is paying off the debt with the smallest amount first, because what that does is that it creates momentum. It motivates you and it inspires you to actually move forward. Now, after you've decided to pay more than the minimum amount due, because I think some people believe that if you just pay the minimum amount, what's happening is that they're going to put that full amount, but they're not going to put that full amount towards your loan. What they're going to do is that they're going to take interest off and then place the remaining amount, which keeps you in that payment cycle that you would have signed off and agreed to. So if it is that you have signed off to pay off your car within 8 years and you just paid the minimum amount due, well, then you're going to be paying that car off within that particular time period. But if you can pay an additional $50 or an additional $100, that will help you get rid of that at a faster rate. So debt number one, you obliterate it. So the money from debt number one, which is $100, you put towards debt number two, which you're paying $200. Then you add on $100, then now you're paying $300 towards it. You could consider also consolidating your debt, and this would be for people who have income. I'm not talking about people who would have unfortunately lost their jobs and are trying to figure a way out. The reality is that lending institutions are not going to lend to you unless you actually have proof of income, that you actually have money coming in. So you could consider that. So let's say, for example, this is an example. Right now you're paying $1,500 in debt, and it's going all over the place. But then with the debt consolidation, you can end up paying $1,000, which would leave you with $500 more to do with it. But with conquering consumer loans, I should say, it's important to know your triggers. It's important to know your behavioral patterns, because somehow Instagram and somehow Facebook knows exactly what you like. Because I don't know if it happens to you, but it happens to me. I don't know if it's just me, but they somehow know what it is that you like. And therefore, all of a sudden, what you like appears, and then there's the option to buy. So it's super important to know yourself and understand yourself. I'll use myself as an example. I know and I understand myself. So if I see something, guess what? I'm going to swipe, which is why I made the personal decision not to have a credit card, because I know and I understand. I know and I understand Melinda, okay? So what I use now is an online debit card. It works wonderful. If the money is on the account, I can make a purchase. If the money is not on the account, I cannot make a purchase, but I'm not paying interest on top of that. So I will let the other panelists have their say, but that's what I have to say about debt management.
Yes, I don't know if you're hearing me now. Great, I changed my earphones. One of the questions that we got is, are credit cards beneficial to young persons or persons of any age? And Melinda was just speaking about her weakness with credit cards. Can anyone else share? Do we really need credit cards? Are they beneficial to us?
Well, I know that they have the attractive features in terms of you could accumulate miles and you could get cash back. Just because they say cash back, it doesn't necessarily mean that you're getting literal cash back. It just means that they're applying money to the balance that you have. But I know of a few friends of mine, they would get the credit card, but they determine the limit at which they can handle. So for example, you could choose to tell the lending institution, okay, I only want a credit card with $1,000 balance. So you spend in terms of your monthly expenditure. So by the time the credit card bill is due, then you just pay the amount off in full. That's where the problem comes in with credit cards. They're convenient, I understand, and you're able to make international purchases quite comfortably. However, if you don't have a handle on the balance, it can balloon, it could go out of control. So it's important to know yourself and determine the limit at which that you can handle. So preferably if you could pay off the amount in full when it's due, that would be super awesome. I don't think that they're allowing people to preload their credit cards like before. They stopped that. So but it depends on the individual. If you're a business owner and you're getting emails, I understand, fine. But the important thing is to really manage your credit card, but most importantly, to manage yourself.
What I think about debt, and really the question about whether all debt is bad debt, and also will tie into the credit card discussion, is that really it comes down to debt. The determination of how much debt or what type of debt to take out comes down to an individual basis, really. Because as Melinda says, she knows herself, she knows her behaviors and her spending habits. So a credit card is not for her. And people who may not be able to be, I guess, disciplined, then for them, it may not be recommendable for you to have a credit card. So that discussion, I think, really comes down, as Melinda's saying, to a personal and an individual level.
Can I add, credit card debt is extremely expensive. So if you get caught up, if you don't pay off all of your debt, then the next month they charge you something like 19%. If you get caught up worse in the process, it would be at like 25%. And that happened to me, a point in time where you have, my son was studying overseas. I had a vehicle that knew whenever I got paid and it wanted some money. So at one time when his fees were due, I had to spend like $7,000 on the vehicle. And that put me in a cycle. So then you end up paying what you think you can on the credit card debt to try to get it down. That didn't work too well. So you end up, my credit card, I had a gold card or whatever, which used to be 19% if I'm late, and I would normally be on time. But that situation put me in a bad place. And then when I realized the interest rate actually went to 25%. So in your hour of need, the bank charges you even more on it. Now, credit cards are good, especially for ready cash. And I think a scripture that comes to mind always is be transformed by the renewing of your mind. So that your mind needs to be in the right place so that you don't start buying everything that you see. I have a friend who wants somebody bought a game. She decided to go and buy a game as well, the same game, a Scrabble game. You can't play Scrabble by yourself. So why are you going to buy a Scrabble game when you don't even have the money? See what I'm saying? So don't do those things. And again, it's how your mind thinks. If you think that a Scrabble game is critical to your life, then you go and buy one and you cannot even afford to pay for it. And you get in that cycle where you're paying the minimum amount and they're charging you interest every single month. So you don't want that. But I think the good part of it is like where you're able to build miles. I have some friends who went to Australia, New Zealand, based on the miles that they had built up. You buy a ticket that worth $6,000 based on miles. So if you are a disciplined person, you can use a credit card like that, where you spend it every month. You buy gas and food. So you can buy your gas and food on your credit card, get the miles, and at the end, when the bill comes in, you're going to pay off. That's the way to use credit cards. Or sometimes you might have an emergency. Let's say your child is sick. You don't want to be able to say, oh, there, can't go. But if you had a credit card, you could swipe. In those instances for critical things where if you didn't have the cash to do it, you could use a credit card, but understand that, you know, this is only for 3 months and you pay off that and that kind of stuff. Thank you.
Another thing about the credit card is don't think it's not free money. The important thing about credit cards is you need to know where that money is coming from when that bill comes in. You need to know, I have X amounts of money that I know I need to pay off this credit card. And I know that's coming in for sure, so I can pay off my credit card. It's definitely not free money.
Thank you. Definitely not free money. We have another question in the chat room. Someone is asking, can any of the moderators share about estate planning, the importance of it, and how easily it can or cannot be done here in Barbados?
With estate planning, it's a simple thing as getting a will done. And I know that a particular credit union facilitates that service. So specifically, I do not know the legalese. Let me make it abundantly clear, but I know you want to make sure you have it clearly laid out and said, oh, you know what, I want this person to get this. I want some of this money to be given to the church, hint, hint. I want some of the money given to a charity, or I want it to be given to my children, or I want to sell the house and let it be split among the children, and those different things. So it's just a matter of ensuring that there are less fires to out at the passing of someone, because people unfortunately come out of the woodwork and they all of a sudden want to claim things. So if you can encourage less infighting within the family, is super important. But then also, should anything happen to you, you actually have things in place just to ensure the protection of your children. Simple things like making sure you have a life insurance policy well, if they're a minor, you can't necessarily put it in their name, but it will have to be in the name of an adult. Hopefully it's someone that you trust, because some adults can't be trustworthy. Okay, let's be real, so hopefully it is someone that you genuinely trust. But if it is that you could ensure that you have a will done by a professional, not a family member, and that be executed by a professional and not a family member, know what I'm saying, right? Because money and family sometimes is an iffy thing, okay? So a simple thing as a will, you could consider looking into that, but just make sure that your children are covered. But then also it's super, super important to leave a debt-free legacy as much as possible. Not pass down that debt to the next generation, but place them in a better position. And then I know there's some people who actually plan for their funerals, who pay for their funerals, who pay for the coffin, who pay for the family plot. There are some people who do that. So if as much as possible that you could think about planning for those final expenses so that it would not be a burden to your family, that would be super great.
As Melinda has mentioned legacy and leaving a legacy, we wanted to discuss how do we educate our children about money and getting financial freedom, not falling into the debt traps. Sherry-Ann, can you give us some advice on how we can get our children on the right path as soon as possible?
Sure. Like you said, education is key. That's the starting point. Really, you have to empower your children to understand money from as early as possible. Let's not make it taboo. Let's not just assume, they can add 1, 2, 3, and, they'll be able to fend for themselves. So really is that education and knowledge is power is key. Apart from that, they also really should see you having financial health, healthy financial habits. So comes back then to that budgeting. Make it a family thing. Make it a sit down thing. Include the children. don't assume that really this is just an adult thing and they don't need to be involved. They need to understand how maybe some of their requests are affecting you as the parents. I really don't have that income coming in. I would have to figure out how to get this money, or I might have to move money from somewhere else to make sure that you can do XYZ. So giving children that, opening their, I guess, eyes to those things early on can be beneficial to them. From a personal perspective, I would have watched and mirrored, I guess, my mom. I saw her, doing her checkbooks. Yes, I may not have been fully in the nitty gritty or details of it, but it's something that I saw her doing. It was a habit I saw that she had, and then something that I picked up then and took into adulthood with me. So mirroring what you putting out there, what you want your children to mirror, and how you want them to advance financially. Uh, I do believe as well that financial planning is something that should be taught in school, just like they talk in school about sexuality and healthy sexual relations and all those things. Finances is also an important part of when they leave school. They go into the world where they have to understand finances. And in that way, we'll kind of start to break the generational cycles, the curses, and so on as it relates to money. So, yes, or for parents made sacrifices so that we who are now more educated can, move forward a bit more from what they would have achieved and progress in the families.
Thanks, Sherry Ann. Jeff, someone is in the chat asking about how does a person with a limited income and obligations prepare for an unexpected expense like a medical emergency? I know you would have talked about that a little. I don't know if you can give some practical advice on how someone can start preparing for unexpected expenses.
If your income is stretched, I mean that you have no wiggle room, you ideally have to find other means of making additional money. In our times, like say for example, there's several people who bake bread, muffins, or find something. You have if you're so stretched, you have to find an additional means of income or cutting expenses. So you have to do things around your house for yourself so that you can't pay somebody to cut your grass or to clean your house or do such things. You have to do all of those things for yourself. The other side is, I think the income part is going to be critical because you've got to find a means of generating income. Look, when we were building the church at Orange Hill, I have an aunt who used to bake so much sweet bread. Every week she would bake, like her son would take so much sweet bread to work, like he might take 20 to his one workplace, and somebody else might take 10, and the district people would buy and that kind of stuff. So I'm saying you would have to find some way of generating additional income. And I go to food because lots of people like food. It's easy. And there are several people in Barbados with disposable income you might not have, but several people have. And there are things that people want done, and they would find the time, they would rather enjoy their time and pay you to do simple things. So you would have to find measures like those where it might be sewing. I have a friend who started making nightwear for people. It might not be the biggest business, but it is extra money. So if you can find something, you gotta find somewhere where you can make the extra income.
Okay, so we'll segue into entrepreneurship because it seems as though everyone can be an entrepreneur. Everyone has something in their hands that they can use to earn some additional funds. Melinda, any advice on how do you go about starting your own business, generating your own income?
So the important thing is to know what it is that you're good at, because once you're naturally good at something, then you have the ability to provide a solution that someone is looking for. So for me, I have the ability to speak, although I'm an introvert, but yeah, I have the ability to teach, train, write, because I've written books, and those different things, deal with accounting as well. So I know that with those natural abilities that I have, and for the love of numbers that I have the ability to provide a solution. So it's important to know what it is that you're good at, and then to find out if there's a market for it, because you just don't want to assume people want what it is that you have. But then it's important to find the people who are looking for what it is that you have. So if it is that you're a shy person like I am, people think that I'm all out there, but I do have the propensity to be. So I've learned to speak publicly. You need to be able to let people know this is what you have to offer. Now, from the financial perspective, it's super important to separate your business from your personal, because if you put all of the money that you earn from your business, you put it into your personal account, guess what? That money is going to go into your personal expenses and not go back into the company, making the company expand. Now, it's important to register the business name. You can go to corporate affairs and do that. It's $104 to register your business name. Simple, easy, I believe. And then you can look to open a business bank account, because you would definitely need the business certificate from Kaipo that you would have acquired in order to open that business bank account. Nowadays, they're asking you to provide projections and all that stuff. And that's where you would come to people like Mr. Ali, Sherry-Ann, and myself, who can help you with that, okay? And then there's a deposit that you put in. So once you have an idea of the bank account that you have, then it's super important to track your spending. It's important to know your numbers in this instance. It's important to know the amount of money that you're making. It's important to know the amount of money that you are spending. Most entrepreneurs don't think that it's super important in order to do so, but you need to know your numbers. So that's where it would mean actually using an accounting system or an accounting app in order to track your spending. A lot of people tend to be using QuickBooks Online. Before, Wave Apps was super free, but it's not free anymore. So it's limited to US and people who live in the US and people who live in Canada. But the wonderful thing about using these accounting apps is that you can actually use it to send invoices to your clients for services, and then you could also track your spending. But the wonderful thing about putting the transactions into these accounting software is that it allows you to generate reports, so you would know whether the company is being profitable or not, so that you could see the particular item or service that you sell, if it's a bestseller or not. If you realize something is not a bestseller, then you would know that you would discontinue providing that product and you would discontinue providing that service. Now, the reason why you're going through this painstaking process of tracking, you thought you'd get away with the budgeting and thinking that you only got to track your spending in budgeting, but you have to track your spending at a business level, okay? Especially if it is that you're looking to get funding to expand the business. Guess what? Lending institutions are going to ask you for the bank statements. They're going to ask you for financial statements. They're going to ask you for those different things, because they need proof that what you're running is a viable business and that you're actually making money with it, and that with their investment or with their giving you that loan, then you could expand the business. Now, for people who actually have products that you sell, it's super important. So to know your pricing, yeah, because you're pricing for profit. You're not pricing before a charity, okay? So if it is that it costs you $2 to make this mouse, you're not charging $2 to sell this mouse, because you're not making a profit. What you would do is sell the product for $10, then you will make a profit of $8, which means you can do different things. But the important things from each sale is super important to know, that to retain the $2 from every sale that you get, because then you'll be able to invest in more. You'll be able to invest in more of these devices to sell. You could actually use that money, reinvest that money into broadening your skills. So let's say you're a baker, for example, you're only good at cookies, and then you want to expand your skills and you actually want to bake a cake. Well, then you can use that money to increase your skills, increase your skills. And guess what? When you do invest in your development, then you're able to earn more income. And then you can use that money to purchase more equipment and all those different things. So it comes back down to the whole budgeting thing, because you do not get away from it. But I really want to stress really to separate your business from your personal, because that's what's going to help your company to grow financially. But yeah, entrepreneurship is for some people. It's not for everyone. It's not for the faint of heart. Okay. Because you really have to go there. You have to, let me be real, you have to hustle. You have to let people know this is what you have to offer. You have to sell, sell, sell. But it's super important to be prudent with the money that you earn from your business. So that's what I would have to say about entrepreneurship.
Okay, thank you so much, Melinda. I have a question. And then there's one in the chat that I'm going to allow the rest of the panel to think about. Somebody's asking which financial institution is better to work with, the banks or the credit unions? So I'll let you think about that and maybe advise accordingly. But we're talking about investing and entrepreneurship and so on. I know that one of the things that seems to be catching on in our neck of the woods is the whole concept of pyramid schemes. Most recently, I've been hearing about blessing circles and that kind of thing. Our question is this a safe path to financial freedom? What advice would you give to individuals about pyramid schemes, blessing circles, and the like? And that's for anybody.
I'll start. This is how a pyramid scheme works. Unless you are at the top, or unless you're one of the founding people within the scheme, you're going to make money. And the only way that it works is if you actually recruit more people. Yeah, that was the word I was looking for. Okay. So they may sell to you that you have a particular amount of money, and with that little investment, you are going to earn this large sum of money. The only reason that that works is if you actually have people recruited within that scheme. It's to be super, super careful, especially when you're looking to invest or multiply your money, because you want to ensure that the institution or anything that you're looking to get involved with is above board. So I always tell people, if you're looking to go into these things, it's important to know the numbers. It's important to know and ask questions. I remember there was a particular company that I was interested in investing in, and it sounded really great and everything. But then I asked them the question, were the financial statements audited? Not I did. I had the question in my head, but somebody asked for me, right? So they asked, are the financial statements audited? And they said, oh, right now we're going through an audit. Immediately, red flags went off in my head. I said, okay, let me take a step back until they can confirm. Because what audit does is that it verifies, and what they do is that they check the transactions just to make sure that everything is above board. And then they sign off, noting that, you know what, this is good, everything's above board, everything that is reported in the financial statements is true, because there's some people who are really good at cooking up numbers and presenting numbers that never, ever happened. All right. But it doesn't settle well with me that, especially with the blessing circle, you put in all this money into someone and you're paying that money into someone, but you're not getting it back, but eventually you do. But the problem is that people are people fall out. And if there is an eruption within that, then you will lose a lot of money. So it's super important to not take risk that you're not comfortable with, because you need to determine what your risk appetite is. If you're averse to risk, then you wouldn't do such things. But if it seems too good to be true, that you could earn this particular amount of money within a short space of time, it is too good to be true. So we as people of God need to be wise We need to be wise because God gave us a brain, and we need to know and be discerning as well too as to whether or not these schemes could work. But the only way they could work is if they recruit a lot of people. But good thing to know and to verify, especially when you're looking to invest in a particular financial institution. Once they're transparent, once they actually have audited financial statements, then you could consider. So ask for the numbers. And if they can't give you definite numbers, well, you know something is really off.
All right, not sure if any of the other panelists want to tackle that as well.
I think Melinda really covered it. But yes, the important thing, one of the key things to know is that there must be that recruitment process for it to work. So after a while, I mean, there's only so many people that that can be recruited. You're going to eventually run out. So what happens then if you're close to the bottom and there's nobody else to come in after you? So yeah, definitely you don't want to be too risky, taking too much risk with these things that claim to look this good.
Okay, thank you, Melinda and Sherry Ann. So the question came in from YouTube about banks and credit unions. I'm not sure who wants to tackle that question. The person wants to find out which institution is the better one to work with.
I can start. I see the credit union as a better option. I think they give you better terms and conditions, and they have a better understanding. You do not have to pay several of the fees that the bank has. If you, a lot of times, I'm not sure if they still do or not, because I haven't dealt with them in this respect for a while, but the bank used to charge you a negotiation fee. I never understood what that was for. I'm negotiating with you, but I'm paying you. I couldn't understand that. And then there's something was called a commitment fee. They're lending me money, but I have to pay them again a commitment fee. What you're committing to me, I'm not committing to you. I didn't understand those things. I think their terms and conditions are more onerous on the whole. There's several fees that they will charge that the credit union will not charge. The credit union would normally have a better rate, I think. And not only that, when you pay back your credit union, a little piece comes back to you. When you pay the bank, nothing comes back to you. Even the interest rate that the bank gives you on your money, your savings, supposedly is, I don't know what it's from, not over some monkey percent now. It's worth nothing to invest. And a scripture that comes to mind always is the Lord said, the least you could do with that money is put it in the bank. So avoiding the bank is not so bad a thing. The credit union, in my opinion, is a better option. I know, like take for example, if you wanted to get a house, their thing is, if you don't have the money to make a deposit, there's 100% financing. At least I know this is with public workers. You get 100% of the money. Take for example, a young couple starting out might want to get their house to start with instead of renting. So you have the advantage where you can get 100% of the financing. They'll give you the money for the mortgage fees, everything up front, so that you can comfortably get your things done and start paying it back over time. So to me, the credit union is the better option.
On the I guess saving side of it, yes, when you do think about yes, the banks really are down to probably a 0.001 or something like that interest rate. Whereas the credit unions do have higher interest rates currently. Apart from that, I guess my take would be you'd have to shop around as it relates to debt, and acquiring debt. Shopping around is probably what you should do to see what the interest rates are like between them, what are the various fees which are attached, like Brother Jeff is referring to, and see what can work for you. In the credit unions, yes, you do have financial advisors, persons who can sit down with you and discuss your, actually you take that budget, your nice budget, and present that to them, and they, can help you and have those discussions with you. As it relates to I guess the infrastructure for the banks may be a little more advanced than the credit unions. So you might find it's easier to do online banking with with banks, as opposed to the credit unions. So things like money transfers might be easier with banks, and making online payments and so on may be easier with banks. So it really depends on what your need is, I think, as well. I think that's also a consideration for whether you choose a bank or a credit union.
Okay. All right. Thank you, panelists. I have a follow-up question to the whole idea of blessing circles that's coming in from YouTube. I think Melinda may have partially answered the question already. So I'm not sure if anybody may want to reiterate anything that was said before, but the panelist is asking if saying that blessing circles are risky, but aren't all investments risky? That's the question.
The blessing circle, though, is at a significantly higher risk than at more established investments. A blessing circle has no legal, I don't think you don't have a legal recourse for a blessing circle. A blessing circle is somebody says, invest $1,000 and you will get back $21,000 in 6 weeks' time. How is that possible? Who does that? So something is fundamentally wrong with the principle. You have to have then some others go and recruit 2 and 2 and 2 and 2 and 2. When those people pay their money in, the person at the top that just invest, you get that money to go home. But the people at the bottom will get nothing for this week or so. Because in the interim, another 6-week period goes by or whatever, however it works, where they recruit, you continue to recruit. So then the ones that were in here a little bit earlier got a piece more. They might get theirs, but the people at the bottom still not get nothing. Then somebody decides, oh, I had enough, I got enough money out of it. Or I don't want to put money back in. Then it starts to fall apart. And you have absolutely no recourse. You cannot go to court and say, well, I was involved with these people and what. There's no recourse. It is highly more risky than any other thing that you're going to think about here. Not that.
The thing that you need to understand also is that financial markets are governed by behavior, not necessarily the investment itself. So, for example, a time like this where there's COVID and it's rampant across the world, people are less likely to invest because they're afraid. That's one. And then number two, they're trying to hold on to their cash as much as possible. Now, the thing to understand with investing is that it's a long-term exercise. So if you go and decide to invest in a particular stock or a particular company, mutual fund, anything like that, that doesn't mean that you're actually, if something happens, that you're going to go and take the money, the price goes down, and then you're going to go and sell the shares, and then you would have missed on an opportunity when things become better and people become more confident and they're investing again, the price will go up. So if something happens, the price is going to go down because everybody's panicking and everybody's selling. But if things are going great and people are more confident and investing again, the price will go up. But again, it goes back to these different things like I mentioned earlier. Does the company have audited financial statements? Are they reporting to the Financial Services Commission here in Barbados, because they're supposed to report on a quarterly basis, insurance companies and those alike, they're supposed to on their activities. And once they're doing that, you're good to go. And those different things, because you're supposed to publish your financial statements. So if you see them publishing them in the newspaper, they're just looking for more people to invest with them. But with anything, there's risk. If you are of a particular age, 40 and over, you're not going to take as much risk as someone who's in their 20s and they have a lot of TIME on their hands. So if you're now getting a job, you could consider start investing in mutual funds, for example, or stocks or shares. Because you have a lot of time on your hands, you can start with $100 and then over a period of time, keep putting down $100 towards it, and it will grow over that period of time. But if you're someone 40 and over, you can't consider taking a big risk right now because you could lose all the money that you've accumulated. People need to know and understand that it takes TIME to accumulate wealth. And also, if it is that you're of elderly age, people will target elderly people and promise, you know what, if you want to ensure you grow your money, you could put your money into this. You have to be very, very careful because there's sharks out there who want to take advantage of people. And unfortunately, there was a particular company, I will not call any names, right? Because I was young and I didn't understand how things were working then. Unfortunately, I have bonds now as a result of that. So it's super important to do your homework and know and understand how the company is operating. So that's all I have to say.
Okay, I'm going to yield to Marsha. Okay, Sharianne, you were gonna say.
Yeah, I was gonna say yes. The last 2 points that Melinda raised are key points. The regulation that is required for established institutions. Corporate governance is really a big thing now, especially after the whole Enron and those things. Regulation and corporate governance is important because they want to protect the investors. Yes, there is an inherent level of risk, yes, in all investments, but have that discussion with somebody who is established, a financial advisor or something, who can lead you down the right road, So like Melinda is saying, it comes down to age, and there are certain types of investments which are a little more risky. And then you have your safer ones like mutual funds and so on, which diversify your risk. So have a discussion with the professionals.
Okay, so I'm yielding to Marsha. I think Marsha has something she wants to ask about cryptocurrencies, so I'm going to give her that opportunity.
Yeah, right. Cryptocurrency and Bitcoin, those are buzzwords for the younger generation. And I just wanted the panelists to demystify the cryptocurrency and the Bitcoin. Is this the future of investments, the future of money? Or what is your take on the cryptocurrency?
It's a digital investment, so it's not essentially physical cash that you're investing in, okay? The risk is very, very high. Let me be realistic. The price can go and shoot up. And when you find things shooting up like that in a short space of time at a rapid rate, it's going to come back down at a very fast rate. So if it is that you're looking to invest in these sort of things which can yield high returns, you have to have money to play with, not the money that you're saving for emergencies or not the money that you're looking to retire with, okay? Do not play with that. Do not play with that. But again, it depends on your risk type, but just know that these things are really, really, really risky. And unless you know how it is operating and you understand it and you would have had experience dealing with it, all right, no problem. There's some people who trade in currencies. Again, you have to know what it is that you're doing because there's particular points at which you should sell and there are particular points at which you should buy. So you have to know what it is that you are doing. So don't let it be that we didn't tell you that, not to be extremely careful with it. But you have to know what it is that you're doing. But again, if you're looking to invest and you have money to play with, save towards that. But just ensure you have your emergency funds in place, unemployment in place, and retirement, all that stuff secure. Please do not use those things, okay? So have a little money to play with if you want, but other than that, it's well.
Yeah, one of the challenges with the cryptocurrency also is that it is not an accepted form of currency in several banks. So in some countries they will not use it. Others will, but again, it's really high risk. So if you have, the point was made over by Melinda, if you have the excess cash, you could try risking some money that might give you a big return. And if the point in time where you can sell or however you deal with it, you can get back something on it. But for people who don't have a lot of disposable income, it really would be too high risk to get involved with it. And like I said, given that several governments are wary of it, you put yourself at greater risk unnecessarily so.
Anything from you, Sherry-Ann, or you concur with the other panelists?
Yeah, I concur with the other panelists. But yes, it really is something that you'd have to understand how the markets are working and so on. It's not something to get into lightly.
Okay, I have checked our inbox and we have no further questions. I think there was a question earlier about the Visa debit card compared to the regular credit card. I think, Melinda, you had spoken to that briefly when you were discussing your love affair with your credit card. So I think some person is asking for you to clarify what is the difference between your favorite card and the other card.
Sure, no problem. So with the credit card, you're borrowing money. So like Sherry-Ann would have mentioned earlier, credit cards, having a credit card or the money given to you by a credit card is not free money. You have to pay it back, all right? And then you're charged interest on top of that. I think Mr. Ali mentioned 20-something% is charged on top of that. And if you're making online purchases, overseas purchases, then there's a foreign exchange fee as well. With the Visa debit card, is you just paying the amount of money for the particular purchase. So if it is that you're spending money on an item for $50 and it costs $50, you're just paying $50 for that. But there's no money that you're borrowing. And the only way it works is if you actually have money on your bank account that you can make the purchase. So if there's $0 on it, let me use this. So if you're looking to purchase something for $10 and you only have $2 on the account, the payment is not going to go through, period. Okay, so having the Visa debit card is kind of like a control in place, and it helps you to stick within your means. But with the credit card, you can spend as much as you want. You can max out the credit card if you desire, so be it. I've done it before, and I'm never doing that again. So that's the difference. That's the difference.
Thanks.
So the Visa debit really is to understand that it's your own money, just like what you have on your savings account. It's basically what you have on your savings account or your checking account. And every time you spend $100, your bank account balance goes down. That's basically what you need to understand. Visa debit is not somebody else's money. It is your own money. It is all the money you have at the bank. If you got paid $300, well, it is $300 you have there on your Visa debit account, your Visa account, your bank account. And when you spend that, that's it. You can't go past it.
Okay.
Can I go back to an earlier thing that we were talking about when it had to do with children?
Sure, Jeff.
Right, and in terms of budgeting, because what I want to say was, what I did with my children is that they were given a weekly allowance. And my statement would be like, this is for you for the week. It has to last the week. If you spend all on Monday, understand you have nothing left for Tuesday and the rest of the week. And invariably, it would work. So if you don't have money to buy something at school, then you might have to find another means of getting something to eat during the day. I suppose sometimes you won't be, because they were children and you're trying to teach them a process, you might not penalize them if they did like spend more than they should in any one at any one time. Let's say if they didn't have anything on Friday, but I'm not going to give you more money. You will have to find something in the house that you can make up, carry to school, because I'm not giving you any more. Another thing was like teach them that you have to make sacrifices and you have to make choices. My son wanted, I think at the time it was an Xbox. He saw it advertised at courts, and you had to pay $12 a week or something like that for X amount of time to get the box. So I said, well, what are you going to do? He determined, well, just give him $15 instead of 25. So that was his way of paying for the box. So I would buy the box for him, and he would pay me back the money on a weekly basis like that. And that's what we did. So to me, it's like those sorts of things will teach you cannot get everything you need. And if you want something, then you need to make a sacrifice in order to get it. So those are two little things I wanted to share.
Thanks, Jeff. Great advice. We have another question in the chat box. It says, what do you say to a person who has already done debt consolidation and still feels overwhelmed with debt because of bad financial choices? How does this person start over, if that is even a possibility? And that's a real question, especially now in these COVID times. Can we get some practical advice for this person? Where do they start?
If you have maxed out yourself, the most you can do is to start by throwing yourself at the mercy of the people that you owe. Because you can't get blood from a stone. You can't get water from a stone. If I owe the bank and I really cannot afford to pay the bank, the most I can do is go to the bank and say, I cannot afford to pay ABCD. I need some kind of leverage here. I need a little leeway that I can pay you back a little less than what I have here. I don't know. So if you might have family or friends who are willing to help you out, but that's tough, because if you've maxed out yourself, how did you get here? See what I'm saying? Because the bank is going to be looking at all those things. How did you get here? What did you do to put yourself in this position? You have got then to find another means of income. We identified earlier, and it's a practical thing. There are things out there to be done. You might have to go cut somebody's grass when the week comes. Find something to do. If you're at the place where you don't have another means, you've got to find another means. You have to find one. There's nothing that you can do. Go to them and put yourself at the mercy of who the people that you owe, and see if you can get that reduced. Try to find that thing that somebody else needs that you can provide. Where you heard earlier about finding using your talents to generate revenue for yourself. Things that you can do for yourself where you can't. In fact, you won't be able to pay anybody to do anything for yourself. But I think those are about two of the things that you can do.
Yeah, and like I think I alluded to it before. I know in the credit unions they have the financial advisors, the financial counselors. And yes, you can present yourself to the institution that you're indebted to. And I do know in cases they do try to arrange like payment plans. I think it happens in the credit unions particularly. They'll try to arrange payment plans with you based on where you're at. Apart from that, I guess my question it really is it really a case that maybe you have been trying to keep it with the Joneses? Are you still trying to keep it with the Joneses? Do you have that budget where you can see where maybe there might be some money which is leaking from you? You may be having some wastage. So do you go buy lunch all the time instead of cooking some meals at home and taking to work instead? There are a lot of little things within our expenditures that we if we really sat down and looked at it, we could probably find, you know, a little bit more to squeeze out from the little that you have. Do all your children have devices? Do they need to have devices? Do they need to have, you know, plans on those devices? You know, there are a lot of little things that you could look at and look into, but that all comes back to planning and budgeting and those types of things.
And then it's also important to take a step back. If you have a particular vehicle and those payments are killing you, sell the car. If you have a family and you have 2 vehicles, sell 1 car. You have an apartment that you're not able to afford, find a smaller one. It just means taking a step back and decreasing your expenses, or it may mean moving back in with your parents. There's nothing embarrassing about that. Just, you know, so do those practical things to get yourself back in order and back in shape. Those things you can do, and don't be ashamed that you're starting over. There's some people who continue to their detriment, because I find that sometimes as a society, we're so caught up with keeping up appearances that it kills us, because financial stress has an effect on the body, and over time it could cause a lot of medical issues. So you can decide, you know what, I'm not going to be eating out like before. I'm not going to be, you know, spending money on all those shoes. They may mean selling, having a garage sale and selling all those things that you've been accumulating over the years that are in good condition, of course, okay? That you could actually sell and that you could actually get money for that. So there's nothing wrong with taking a step back. Who cares what anybody else thinks? It's your life at the end of the day, and just make the necessary adjustments right now where you can get yourself back in a stable financial position, and then you can move forward. So there's nothing wrong with taking a step back.
There's a thing that I know a friend did, or a few people, and it was recommended to some others, and they didn't take it. Sometimes people lose their jobs and you have a house for which you're paying a mortgage. Some people are able to move back in, you mentioned earlier, with their parents and rent out their house. So if you're able to rent out your house, hopefully you get the money that is enough to pay the mortgage, and you stay somewhere else at a family member or whatever. Hopefully you don't have if you don't have 5 children or whatever, it might be just you yourself. So you'll be able to move in back with your family and scotch there for a little while until you get yourself back together. Somebody else will be helping you to pay the mortgage, or even if you don't get the full mortgage payment of $2,000, you might be able to get $1,500. But then you only have to look for $500 to put with that. And even if you didn't get the full payment, the bank will still be getting the $1,500 when the month comes, and it be able to hold your house for you until such time as you can get it back. Because most Barbadians will own only one house in a lifetime. Most of us, or most of them, will only own one house in a lifetime. And to let it be sold when you are 50 or 55, you know, things aren't going to get better for you, because the bank will sell the house. I think the bank has to advertise 3 times or something like that. And if they don't get it sold for the price they're asking, which should be the market price they're asking, and if they don't get that, then I think legally they're allowed to sell it for what they can. I suppose they still within reason, sell it for what they can, and then you will still owe them the difference. So if you can move out of that house, go with somebody else that you can live with, and rent that property.
Very good advice. And our final question for tonight is, can we get a perspective on hire purchase agreements and the dangers of them? The person wants to know if the quote unquote coolie men led us into a trap of getting things we cannot afford.
I think like, depending on the situation that you're in, there's some people for whom the coolie man has worked very well. You might end up paying more over time, but the fact is you were able to do the things that you needed to do at the price that you could have afforded. I joined Amway some years back, but then it was like, I don't have friends who can buy a small bucket of soap powder that's going to last them a year for $300. I don't have those friends. My friends are the people who go and buy Breeze every week. And Breeze is you're going to be buying the Breeze over and over, and you might end up spending more than $300 for a year or whatever the thing costs. But the reality is that they don't have the $300 that they can spend. And I think the Coolie Man situation would have been one such. Because when your mother was able to go to the Coolie Man and take uniforms for all her children, her 8 children, 9 children, then she could pay about 50 cents. And if she didn't have 50 cents this week, the Coolie Man go and come back next week and get 50 cents only. But that his way of collecting that, it worked for them. I think people are now at a better place where you don't necessarily need to. The hire purchase is at a really high rate though. I think something about I calculated those and they'll be like at 44% whenever you're finished. It would be better for you to go to your credit union, get the money, buy the chairs, and pay back. Your loan to your credit union is going to be at 11% or something like that, which is significantly better than the 44% that you will be paying at $44 a month for the next 10 years or however long they give you. If you can afford to pay the, if you can pay the cash, it wouldn't be hire purchase. But hire purchase is at a really high rate as opposed to like a loan from your credit union.
Thank you, Brother Jeff. I think we had a very informative session. I will take this time now to say that the church does have a credit union, One Heritage Cooperative Credit Union. Our number is 435-2227. Please give us a call. You've heard the panelists say credit union has its advantages for hire purchase, for debt consolidation, for all kind of financing. So reach out and we can help you find some of your solutions and help you to get some financial freedom. That's it for us. I want us to remember that freedom is in Christ alone. And whatever we do to obtain financial freedom, we must put Christ first. And when we put him first, he will help us achieve all that we aspire to. And putting him first means that we put him first in our money matters first. And money is not just for us. I have a friend that says she prays that God would bless her so that she will be a blessing to others. So our financial freedom is not just for us, but it is also to assist with the work of the kingdom. My takeaways for tonight is first that we should keep good records. We should write down, we can start by making a list of our current expenses to track where our money is going. We're not throwing away our receipts. We're not throwing away our pieces of paper. We're taking note of where our money is going. And after we've tracked where our money is going, then we are going to do a budget. And in this budget, we are going to make provisions for our regular expenses as well as our irregular expenses, in addition to putting down a little extra for an emergency fund. We are also going to teach our children how to manage their money by showing them by example how we manage ours and giving them tasks. And as Brother Jeff has taught us, an allowance, give them an allowance, teach them how to make their allowance work for them to get what they want. And Sister Sherry Ann has said, we need to push to have financial management included in our school curriculum because it is a very important aspect of our children's lives and it affects their future greatly. Then we had a look at debt. We concluded that all debt is not bad debt, but that debt should be managed. And if you've come to the situation where you're like our sister Melinda and you cannot deal with the credit cards, you get rid of them. You start by paying them off. You pay them off one by one, and you take the money and you continue to pay them off. Failing that, you can get a debt consolidation loan if you're working. And I already told you where you can get that loan. I will say it once again for those in the back, One Heritage Cooperative Credit Union. And if you find yourself out of work and your debt is getting unbearable, Brother Jeff recommends that you go to the financial institution and you have a discussion with them and try to get your debt under control. After we've paid our debt and we have excess funds, then we're going to make some investments. But these investments are to be safe. We're not doing blessing circles, and we are investing cautiously in the crypto and the Bitcoin. That is after we've covered our retirement planning and our emergency fund, and we have some play money. This is what we're going to invest. We're going to invest safely. We're going to research the companies we're going to invest in, and then we're going to build some financial wealth for our children and our families. Anything I left out, panelists, that y'all would like to add as a takeaway to our guest tonight?
For me, it's that you have to understand that your financial freedom and your financial empowerment really is a personal thing. So don't watch your neighbors. Don't look at the Joneses. Don't look over the fence to see what's happening. Concentrate on what your goals are and how you can be content with your finances.
Thank you, Sherry. Parting words, Melinda?
Yes, actually, God gives us money so that we can be stewards. And last year, I really started committing to tithing and giving, because you can give in the midst of a pandemic. You can give in the midst of a time of uncertainty. If I can be, transparent, being an entrepreneur, things were affected. But even in that period, although things were crazy, I've managed to pay off about 10K in debt, about that, just under, or just something about that, right? But the point is that you're not giving to give, to get whatever, but you're giving because you're honoring him, and he will honor you, and he will take care of you. And he wants us to be in a great position, in a healthy financial position, so that we can sow into his kingdom, so that when we do sow into his kingdom, that more lives can be transformed, more lives can be changed. We can set up credit unions, we can set up schools, we can set up hospitals, those different things, okay? Because at the end of the day, he wants his kingdom to come on the earth. So if we are each financially responsible and we commit to tithing and really giving, he will take care of us, he will give us ideas, he will expand us, he will multiply us. So at the end of the day, that's where the foundation starts. Once you honor him, he will honor you.
Thank you so much. Brother Jeff.
That's the scripture, be wise as serpent, harmless as dove. I think that's one thing that we need always to be. So with your money, with whatever you have, be wise as a serpent, but harmless as a dove. And the other scripture I like is be transformed by the renewing of your mind. So that Sharia mentioned, like, not keeping up with the Joneses. It's your mind that tells you what is important and what is not. Going after trivial things that you do not need. Don't let somebody else tell you that you need a Gucci bag. It makes absolutely no sense. A bag is a bag is a bag. You can write Gucci on it if you want, or don't write Gucci on it. But don't let people tell you that you need these things to live. I have a friend who used to live, he likes Tommy Hilfiger. So he likes brand. It's like, what? A man put Tommy Hilfiger on a shirt until it's worth $300? That makes no sense. So I think, like, be wise and make sure you use what God has given you very wisely. Thanks.
Thank you very much. I defer now to Reverend Lennox to wrap it up and say a prayer for us.
Okay, thank you, Marcia, and thank you, panel. You did an amazing job this evening. I hope that we can do this again Sherry Ann, Jeff, Melinda, I hope we can do this again. This was fantastic. Very empowering, very informational. I just want to thank you for availing yourselves, for sharing of your expertise, for just coming and for sharing from your hearts and for blessing our people this evening. I was truly blessed by what you guys shared. I believe that these kinds of conversations are essential for the people of God. Because everything that we have, we receive from God. And so it's important that we understand how we can be the best stewards that we can be with what has been entrusted to us. Marcia summarized what you said. She must have been a teacher's dream. She had everything written down, all the notes and everything. I'm not sure she was able to do that and ask questions at the same time. But it was tremendous. It was tremendous. And we had over 100 persons on YouTube watching. And I know that over the next few days, there are those persons who are not able to join us live, but who will be able to see this. And so for a long time, persons will benefit from what God was able to use you to achieve for him and for his kingdom and for his people tonight. All right, so let's have a word of prayer and then we are going to wrap up. Father, thank you so much for being such a wonderful Father to us. Thank you, Lord, for showering us with blessings. Thank you for creating us with gifts and talents and abilities. Thank you, dear Father, because these open possibilities for us. And we want to thank you, Lord, for the ways that we have been able to utilize the gifts and abilities that you've given to us to be able to acquire wealth. We admit that we have not always been good stewards, but we are just praying that the information we've received tonight will help us to be better stewards of what you've entrusted to us. I pray that where we have made missteps, that we would be able to correct them and that we would be able to walk in freedom, not just spiritual freedom, not just physical freedom, but we want to also be able to walk in financial freedom because we believe that this is one of the ways that you want us to be able to walk in freedom. So thank you for our presenters. I pray that you will continue to anoint them to share, to be able to unlock doors, to be able to help persons to make the best decisions. So bless them, Lord, in their own personal lives and in their endeavors and in their careers. And bless our moderator as well and our technical team. All those persons who are on this call, who are joining us on YouTube, we just pray, Lord, you would unleash your blessings upon them. We pray that you will open their eyes and that all of us will begin to make good financial choices and decisions and make you and your kingdom proud. We bless you and give you thanks. In Jesus' name, amen. Amen. And I just want to encourage you to be with us next week for our final session. Our final session is going to be a growth mindset, looking at the value of lifelong learning and things connected. So please join us next time. God bless you.